Okay, not sure if this is working. Sounds as though it is, though. What we got here is a chart of gold, and it's a daily chart running from when it was at its high at 1923 back in over a year ago, probably. And it shows the ups and downs that gold has gone through. It's like any other commodity. I drew a trend line from the top through the last top, which was occurred back in probably about March, late February, March, when gold was up around 1790 or so. And that line gives us a trend line, which will be serving as a resistance for any further movement upwards. Its bottom line here just simply gives me a wedge to look at to see if gold penetrates down to the bottom of it. The green line here is a 20-day moving average. The blue line represents a 50-day moving average. And the thick dashed line here is a 200-day moving average. That's a very important number right there, because it's very difficult for anything to get through that 200. So it's a very significant line. Gold penetrated to 200 back in March of this past year and has steadily made its way down. And now we've been, since probably May, in what I would call a sideways movement. And it's another wedge here. You can see if I drew a line from here to here and from here to here, there's a wedge. So it's going to resolve itself by breaking out of this wedge. What we got is a breakout through the larger wedge now, and it also broke through the 200-day moving average. So one might say that gold is in a breakout at this point in time. Now, whether or not it's the breakout or a big breakout, that remains to be seen. This trend line right here runs from way back, and it's a long trend line. And gold broke through that back in April and has stayed below that trend line. So the big significant thing to me is you've got several things. You've got the 200, you've got this trend line here, but the major trend line's right up here. So for gold to get up and break through that, which would be around the 740, 750 range here, and it may take, if it ascends at this rate, we'll probably get right along here on it around 1740 or 50. And if it penetrates that, then the next point would try to be break this last high right here, which is up around the $1,800 mark. We get past 1800, 1850 on gold, I would say that, yeah, it's in a breakout and it's going to really go, but anything can happen. And all these people with the newsletters are saying, oh yeah, they're rallying gold and this, that, and the other. I don't get too excited about it. It's in a nice breakout, but it can always get up here and fail without question, and then it has a chance to fail up here also. But if you got in down here at at $1,500 to $1,600 level, then oh yeah, you're going to be okay. You take your ride. But I'd be very cautious up around 1,700 to 1,750. I'd be considering taking some profit out of it, because you just don't know what it's going to do. If it continues to go, you can always get back. Of course, it's not a big problem. Okay, so that's gold for the time being. There are other factors at play too. The dollar's going down. There's currency wars going on. Everybody's trying to devalue the currencies, and I'll put something up on that in a little bit. That's what's driving gold. But these are gold futures, and it pretty much reflects the spot price of the gold. But I don't see a giant breakout at this point. Like I said, it'll prove something to me up around 1750. Otherwise, it's just a typical move up, which could be followed by a move down. If it comes down past this line here, then I've got something to worry about. Okay, that's it for now.